Good day, everyone. This is Patrick from EasyFX Code Trading System, and this is Saturday, the 17th of December, 2022. And this is the weekly technical analysis for spot gold and dollar yen for the third week of December. And this will be the last analysis for the year, as the holidays are coming up with Christmas and the New Year. So we'll resume at the end of the first week for the new year. Let's begin with spot gold. And on the Tuesday, there was a big jump, and it bounced up and hit the trend line exactly before being rejected and paused on the Wednesday with the FOMC late afternoon in the US, where they did increase rate by 50 basis points, but then they did project a higher terminal rate for next year than expected. So the following day, the markets gave up and lost to the US dollar on the Thursday, before finally bouncing back up and recovering somewhat on the Friday with worse than expected US flash PMIs. So basically a move back up for the majors and then falling back down with the US dollar recovering towards the end of the week. So let's take a look at that trend line that we extended from way past before. It was from a triangle breakout and then pull back and fell back to before finally climbing back up to test it as resistance again, and which we identified as a potential resistance zone. And it did hit it exactly before pulling back. So this coming week, we'll see if it's able to break down below the daily 200 EMA here at the 1762 area to drop into 1750. Where the daily 55 is also coming up. So this area is the next key support with this swing high at 1729.50 area. So this 1800 now is a intermediate resistance. We'll see if it's going to resist the spot gold attempts to recover. And let's also take a look at this other trend line. This was a previous swing low here. Right. Okay. So the intermediate support is still valid, and further down at the swing high area, that's still valid for next key support. There's only minor news this coming week, and this will be the last major week of news. Following that, the last week of the year, there's not much going on, and it should be a quiet week as well, with UK and Europe on extended long weekends. So this week we'll see if it's able to climb back up above these highs here of last week, and whether it's going to tumble back down through the intermediate support zone or break through the 1750 area down into this cluster of support where the daily 55 is coming up to. And there will be strong support at the 1730 area. So for now, it's holding up above the 138 fib extension. And we'll see how long that will hold. This 200 EMA is going to be a key zone of support. So we'll compare this with the US dollar index as well to see whether it's inversely correlated and whether it's managed to climb back up after the Fed's announcement, which is slightly hawkish and which has a higher terminal rate than expected. So let's switch over and review that. And here's the US dollar index, the DXY, and it did drop below the lower trend line of the triangle on the Tuesday with the lower than expected CPI figure, which hoping that the Fed will slow down the pace of rate hikes. And that was why the US dollar fell hard on Tuesday and attempted to hit the support zone at the 103. And did get close on the Wednesday of the Fed's announcement and managed to rebound and climb back up on the Thursday. And managed to follow through slightly as well on the Friday. So not much of a pullback on the Friday. So it's still forced a good close here. And with a long wick above the weekly 55 EMA. So that's a positive sign of support for the US dollar here. Now it has to contend to climb back up above the 138 fib extension and the key round figure of 105 here. And then above that, the daily 200 EMA. So it needs to break through some resistance areas before trying to get to the 106. So we'll see if it's able to get there next week or whether it's going to be limited by the daily 200 EMA. All right, let's move this over here now. All right. So some possible support for the US dollar after a significant fall already and retracement all the way back from where it started from the middle of the year. And well above that, there's the next key resistance zone at this swing low. Okay, so this 162 fib extension did could be a potential pivot level, and that's where it turned back up. So we'll see if it's able to continue the bounce and recovery. All right, let's move back to the other major pairs. Okay, so before we move on to the dollar against Japanese yen, let's just take a quick look on the weekly time frame for spot gold as well. And it closed as a spinning top with long wicks on either side. So there could be a change in momentum and a slowdown and possible retracement lower. So that could be a key turning point here below the 1800. Okay. All right, let's take a look at the dollar against Japanese yen. And similar to the US dollar index on Tuesday, it did dip lower and managed to find support though at the 135 round figure along with the daily 200 EMA. Paused on the Wednesday before managing to climb up back up and tried to climb above the resistance zone, but pull back on the Friday. So that's at the 55th area. So the next key resistance is still valid at the 140 and the 62-fib retracement, along with the daily 55 coming down. Let's see if this is going to factor into the resistance as well. Let's take a look on the weekly time frame. And a spinning top. Possible continuation move next week. So yes, it needs to try to recover somewhat back to the 62-fib retracement and attempt to get closer to 140 round figure. Okay, so this coming week will be the last opportunity for the US dollar to recover. And for the month, let's see if there's any. Okay, so it is trying to bounce and recover back up for the month after a significant fall in November. All right, so greetings to everyone for the holiday season, and we'll catch up again after the new year, at the end of the first week of the new year. And everyone do stay safe, have a good trading week, and cheers for now.